Hello guys, welcome back, welcome to FX bit of Forex Algo Decoded. My name is JD. Today let's talk about this type of candles you see here, and it's something I want you guys to understand when you are framing your setup, guys. So guys, you already understand the basic structure that the market will be creating: a low, high, low, high. This is the basic structure. You already know. So this is your structure low, structure high, structure low, structure high, structure low, structure high, structure low, a break of structure to the upside, and then you have a bullish move. This is a classic structure, guys. You have a bullish move going on here, a bullish move here. So what we're gonna focus on is, after this break of structure, how do you know a swing high is going to be formed here, and how do you know a swing low is going to be formed here? As market is pushing higher, how do you know a swing high is likely to stop here? How do you know a swing low is likely to stop here? So in case you want to play with kind of ping pong, right? So here I'm gonna give you a little guide, and you have to back test it. So first of all, you have to understand the previous structure you have on the left side before you deal with that. For example, you have to understand the kind of imbalance you have here. Imbalance, when you say imbalance, is when you have imbalance or a fair value gap, is when you have free candlesticks. You have free candlesticks, and this is the first candle, this is the second candle. You start from anywhere. This is the third candle. So, and as long as the weak low of this candle, the first candle, and the weak high of the last candle did not match, they don't touch each other, that's what we call imbalance, guys. This space you have here is what we call imbalance. I think you already know that imbalance, right? This is what we call imbalance. So when you're trading, make sure you mark your chart like this. And then also you have to understand this vacuum block. So when the close price and the opening price do not touch each other, so you have to know this is also we call it the vacuum block in terms of ICT concept, guys. So here, make sure you mark this zone because it will be mitigated in the future. So there is a kind of imbalance. Market need to be rebalanced here. So here we need a balance here. We need to see market coming back to fill this zone, guys, if you can understand what I mean. So when you are dealing with structure, for example, in the bullish market, this is a clean imbalance. Hope you understand. So what I'm going to focus on is not to go dive deep into this. I'm not going to dive deep into this. You can still watch it for free on YouTube. There are so many videos talking about it. So let's focus on trading with this structure. So here, after you have identified your swing point, let's say market will be pushing down. This is the push. Market is going down, guys. You have your structure high forming structure low. As this market is pushing down, there may be a pullback. Let's say a pullback is going higher. This pullback is likely to trade on this level and then goes down. So once it's going down, the first objective was to remove this level, to remove this this kind of vacuum block resting here, or a kind of gap, if I can say. So here, after trading on this level, market will go down. So as market continues to push down, this market is moving like this, market is moving like this, and then you've got a break of structure. Market breaks structure and it continues to go higher. So after breaking this structure, you understand that market will be creating a range structure. So this range structure is likely going to do what? It's likely going to look for your imbalance resting here. After reaching your imbalance here, market is likely to do what? Market is likely to reject the zone. As long as you see market rejecting this zone here, like this, with a clear rejection of the candle, you can use lower time frame to identify what? To identify a push to the downside. So after this push forms, you understand that market is going to create a pullback within your range, within your bullish range. So you immediately have to spot what? You have to spot your imbalance resting below here, your imbalance resting below here, for market to trade within it, and then market reject and start going higher. So after going higher, let's say for example, after going higher, you have another break of structure here. After this break of structure, you see a sharp rejection. Where does this sharp rejection come from? It may come from what? This kind of resistance level. So what kind of this resistance level, guys? It's when you have what? When you have the close of the candle and the open of the next candle, that zone can form a support and resistance. So you have to remember that. So after this sharp rejection, you can change it to our time frame. If you find a break of structure, you can do what? You can look for a sell targeting what? Targeting the low. So what happens if you don't have imbalance? If you don't have imbalance, for example, you have a week like this, so make sure you change time frame and define what? And define imbalance resting in this area, and use that for another buy move, within this week, within this strong week. Use it for your buy move. So this is it. So after you frame your setup, just first of all frame your setup, and after framing your setup, mark everything. Remember to check what? Remember to check your economic calendar to see a kind of news that will form or events that may affect your setup, guys. That's why I have found a beautiful site called Fastbull. So you type Fastbull in your Google and you will see the first site here, guys. It's a beautiful website with real-time data. And then you click there to take you guys to the official website of Fastbull, and then you click here on the economic calendar. A new window will open, guys, and here now you can do what? You can check your economic events that are going on around the world, and then you will take a decision, guys, before you take any single trade. Make sure you understand what is going on. And here you have the real data. So here you have all data will be listed here, time and kind of impact. If it is a very strong high impact or low impact, you have to know. High impact, you have free star. So these are the news, and then you have actual, forecast, and the previous data, forecast, and actual. Actual will be the real data that will be updated. Then remember to check your time zone. Maybe you can use to mark your trading view, and then remember to click here on the screen. If you want to filter the news, you can say if you need economic events or news from G20 or Asia, Europe, North America, or Oceania, or South America, you can do that. For me, I like clicking here on more, and then I filter here. For example, if you have everything here checked, you can remove this and stay with, for example, with high impact news, where you have 3 stars with a red color. Then trading asset, you can choose either USD only or Euro or GBP, depending on the asset you are trading. Maybe you need USD news if you are trading Euro USD, for example, or GBP USD. You may need USD, maybe Euro and GBP only, maybe. And then you can keep ticking whatever you want, guys, that matches what you are looking for, and then click confirm to show you data that matches your filter. So you have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and you can also check next week here and whatever. So remember, you can also download this. You have app for Android and Apple, guys, and you can use this, guys, for your analysis. Use it for your benefit. There are some links down there in the video, so you can use it, guys, and study the calendar, because it's updated automatically, guys. So let's go on and talk about this concept, guys, and how to use it. Let's say, for example, this depends on the time frame you are going to use, guys. For example, if you are going to use weekly, make sure you understand that it will be showing you bigger structure. So as market is pushing higher, let's say, for example, let's start from the structure you have here. You have a high, you have a low, then you have a breakout structure. So after this breakout structure, you understand that on our time frame, everything happening here will be what? Will be a range structure. So where is it likely to stop? Where is it likely going to stop? So here you have to look left and do what? And mark your zone. The purpose of this move is to remove this zone. Remember, this is weekly. If you go to daily and you see another imbalance resting here, you can do it. You can use it. For example, if you go to daily, you can check if you can see another form of imbalance resting here. If you don't see it, no problem. As you can see, look at here, you have another imbalance resting here on the daily time frame. As you can see, market is touching the zone. Look at your range structure is here. Market is touching your zone, then it start rejecting. Then you can look for sell opportunity after this candle rejection. So if you go back to weekly time frame, So you have to ask yourself, what do you have here? Do you have imbalance or do you have a wick? Do you have imbalance or do you have a wick? Focus on the start of the move from here. You have a strong wick rejection. After this wick rejection, try to use the lower time frame within this wick and find what? And find imbalance resting there. You can use like daily to check. You check on the daily, there is no imbalance. You check on 4 hour. You check on 4 hour time frame. You check on 4 hour time frame, and then on 4 hour time frame you find what? You find your imbalance resting there. You find your imbalance resting there. This is your imbalance within your wick. Within your wick. So you have to understand, within your wick. So we have imbalance starting from this level. Look at it, guys. Look at it. You have a candlestick here. This candle. The high of this candle, of this bullish candle, and the low of this bullish candle here. Imbalance must be formed by 3 candlesticks. So after identifying this, so you mark it. This is your imbalance. This is your imbalance. So from that move, you know market is doing what? Market is coming to target this imbalance. Market is coming to target this imbalance. Then you've got another break of structure. After this break of structure, start from weekly. Starting from weekly, try to see. Do you have anything that will push price down? Do you have anything that will push price down? What do you have here? You simply have a wick. You simply have a wick. So within this wick, try to find imbalance within this wick. Try to find imbalance within this wick. So what you're gonna do, go back to daily. Go back to daily time frame and check what you have in the daily time frame. In the daily time frame, you have what? You have this kind of imbalance. You have 2 imbalance. The first one is this one. The first one is this one. And it is the one behind this return move. You can see that. Then the market, after trading down, that was your opportunity. Remember, internal structure continuation. Market is using internal structure to create range structure. So here you can say we have another imbalance, but not a good one. Not a good one. I mean a good one for me. Supposed to be down here. Market is supposed to go down and touch this area like the way it did it here. So then market goes higher. You have what? You have another imbalance above or the daily. So you can see I'm choosing imbalance, guys. You can see I'm choosing imbalance. I'm just looking at 2 candles, 3 candles. So I have this candle, I have this candle, and I have this one. So the low of this candle and the high of this candle did not touch each other. So I have imbalance resting here. I have imbalance resting here. So I can extend it now, and then I will be waiting for what? I'll be waiting for a reaction on this area. I'll be waiting for a reaction on this area. I'll be waiting for a reaction on this area. So what do you mean by a reaction? A reaction is simply a rejection. So you have to understand a rejection. A rejection, guys. You can see. You have to wait for a rejection to form in this area. A rejection to form, and then use lower time frame. You can see a rejection, a break of structure, a rejection, a break of structure to the downside. Then you know at this break of structure to downside, so you understand that market is likely going to start creating what? A deep pullback. So you are selling on this level to target some form of imbalance or vacuum block or what? Imbalance within a week, resting there. Go back to weekly time frame. Back to weekly time frame. They try to see what you have. On the weekly time frame, in this area, in the weekly time frame within this area, what do you have? You have this kind of there is nothing you have here, guys, because everything is mitigated, except this one. As you can see, market may react to this, as you can see, just for a small push to the upside. But if there is no break or structure, you have to stay away from that. So here you can use daily. On the daily, you can see that you have what? You have your imbalance here. You have your imbalance here. After this imbalance, you have a beautiful rejection. You have a beautiful rejection here. With this rejection, check if you can see a clear break or structure. There isn't. Wait. Remember, this is a higher time frame. So you have another vacuum block here. Also call it gap. Some say gap. Whatever. Just understand the close and the open of the candle, as long as they don't touch each other. So you have a sharp rejection again, and then you have what? You have a clear break or structure. A clear break or structure. So after this break or structure, where is this high going to be formed before a pullback forms? Can you see? You have a move like this, then you have a break or structure. So how can you sell this high to come back here? So you need what? You need to see your imbalance resting here. You need to see your imbalance resting here, and you need to see what? You see this level. You have to see that imbalance is broken with a body, so you remove it. There is no rejection, and then you check within this week also. You check within this week also to see what's going on there. Check within that week to see what's going on there. In this area, we see nothing. And then check to 1 hour to see. You have to check every time frame until you find the concept you truly understand, the concept we are talking about. If you don't see it, you have to pay attention. You have to do what? You have to pay attention. So as you can see, try to see now. Try to see. We have imbalance between this candle and this candle. The wick don't touch each other. So I mark it like this. I mark it like this. As you can see, you have a beautiful sharp rejection. And then you have what? You have a break of structure. you have a break of structure right here. Now after this break of structure, you understand what? You understand you are going to be bearish. You have a bearish move. You have what? You have a bearish move. You're going to have a bearish move as a pullback, because remember you've got a break of structure. You're going to have what? A bearish move as a pullback, as you can see, guys. So you can use this style to try to understand what is going on. So why certain moves forms. So when you are going to backtest, try to backtest in different time frames and understand the flow. Understand the flow. It's a full backtesting that you have to internalize and to master this type of movement market is making. This type of movement market is making. It's a full backtesting that will be able to master what market is doing. Just take a move, you try to see on the left what's going on. What's going on? For example, look at this week. This week here you have here, after filling this level, you have a rejection. Market is doing what? Market is pushing down to another zone, like this, from one imbalance to another imbalance. Market pushes it higher. Look at this week. Where is it coming from? Look left. You have imbalance resting here. You have imbalance resting here. Market touches within your imbalance, pushes down to look for another imbalance resting below. You can see resting below, and then the market goes higher. Where does it come from? Where is this week coming from? This one. You can use your own eyes. Look left. Try to see. Try to see. Have you seen it, guys? Have you seen? Market touching the zone, then reject. The same time trading within your resistance level, resting here, resting here. I'm not diving deep into this, guys. I'm trying to show you how to work with highs and lows. Look at this move, rejection. So where is this coming from? Look at this week. Check imbalance within that week. Market is pushing. Where is the next target? Look left. You have imbalance resting there. The imbalance resting there. You have what? You have your resistance levels. And then market reject. Now you understand that you are going to have a push to the downside. Then you know how to read the highs and the lows, and where they are likely to be formed. So hope you truly understand now what's going on, guys. Hope you truly understand what's going on, and you can apply this on your chart. So if you look at, for example, on weekly, where is this move coming from? Look at here. Look at here. So why is it stopping here? Check on lower time frame and find why. So every single move will be looking for something. If you don't find it here, check on lower time frame. Look at this imbalance fail, market goes higher. So if market is pushing higher, after filling this imbalance, what is the next target? Look left. Imbalance is there. Let's say if you are planning to buy, from here, so what kind of imbalance market is gonna use? Market is gonna I'm not giving a signal that's going to buy or sell. I'm just giving you the flow. I mean, in case you do analysis and you believe it's going to go higher again, so which zone are you going to use? I don't see anything here. Then I'm changing to another time frame, daily. Then I have what? I have my imbalance resting here, balance resting here. So any break of structure can result into a buy program. I'm not giving you a signal. I'm just giving you a flow of the market. How market is a flow. Market creates a flow. So you understand the idea. You can now use it within your trading plan, and you can do what you can backtest it on your favorite. Pair, guys. So thank you very much. Thank you for watching. Until next time, guys. Good luck and good trading.